Global stocks falling as China pushes its yuan currency down to a 3-week low. For more, we go to Michael Ingram, a market strategist with BGC Partners in London. And Michael, just when we thought things started to stabilize, of course, we had stocks and oil up last week. We wake up to this news of a China yuan devaluation. What is China trying to do here?
Yeah, it's all feeling very brittle out there, is it? I think ultimately China is struggling to find reflationary levers. It's had a surprise cut in its reserve rate requirement earlier on this morning. It's toying with the idea of expanding its budget. I think we'll hear a little bit more on that from the National People's Congress next week. But of course, the hot potato is at what extent can they reduce interest rates without further undermining the strength of the yuan. And as you mentioned earlier, you know, we have seen a very, very weak fix again. I remain of the opinion that a weaker currency is going to be part of the mix going forward. And I still think we're looking at about a 15% downside on where we are right now. And of course, that will have global ramifications and certainly upset the apple cart as far as the G20 commitment runs to avoid competitive devaluation, because whether they admit it or not, they're all quietly doing it.
Yeah, and of course, all this devaluation factors caused tremendous volatility towards the start of this year. You mentioned that drop in the reserve requirement. What does that move tell you about the strength of China's economy?
Well, it tells you that real activity continues to slow, and indeed that's broadly the picture in global emerging markets. What at the heart of comes to it is this great contradiction. They want to increase support for the real economy. One of the channels they might be able to do it is via credit, and the cut in the 3R is part of that. But at the end of the day, one of the problems which China is having to deal with is historic overinvestment. So you know, to my mind, it's really delaying the inevitable. We need to see a lot of bad investment just written off. We need to see banks recapitalized on the back of that. But over the short term, a lot of this, unfortunately, is going to be deflationary at a point in time where, you know, finding and generating inflation is almost impossible for policymakers on a global scale.
All right, now China has sort of taken a back seat in the markets in the past month or so as oil takes center stage. But going forward, I mean, which will be a bigger theme for the markets, China or oil?
I think overall it's still going to be China. But I mean, oil, of course, can exacerbate the situation. You know, at the moment, I think people are looking at it really rather bottom up. You know, how is it going to impact oil companies? How is it going to impact the banks which are exposed to those sort of credits? But at the end of the day, there's general agreement that it's positive news for the consumer, and you know, be careful what you wish for. If we see a shakeout of US shale, and there are some signs that this is actually starting to happen, we see a rebalancing in the market, we see a move upwards in the oil price, perhaps quite aggressively, $20 or so.
Right.
That's a negative shock to the consumer at a point in time when global growth is already looking very, very weak. So, you know, watch this space.
All right, and very quickly, we've been seeing oil prices sort of dictate stock prices in recent months. I mean, what catalyst do you think will break the two out of that cycle?
Well, for me, one of the things I've been looking for over the last month or so has been some evidence of stabilization of earnings growth and a forward forecast. Unfortunately, I haven't seen that. We are close to closing what has been a very disappointing earnings season in Euroland. I would have to single out the financial sector, the banks, as being one of the most disappointing parts of this. And if you look at it from a top-down perspective, you know, forward-looking GDP forecasts are also falling. So I'd actually want to see some evidence, bottom-up and top-down, that growth is stabilizing and earnings are coming through. Unfortunately, we ain't there yet.
All right, Michael Ingram from BGC Partners in London. Michael, thanks very much for your time.
Pleasure.
I'm Scott Gamm, and you're watching The Street.